we got a consolidation triangle with a breakout and some speed wobble into a side wall that I didn't know about until just now. So this is Brian Lewis with MMT Investing, and things just changed. So if we take a look down here, we can see our consolidation triangle here. And then after we break the consolidation zone, we have this kind of weird activity where we're finding the edges of the range, and I'm calling this speed wobble. It's like when you're going down a wave surfing or you're going down a skateboard ramp and you have too much speed at the bottom to control where you're going. You just get these crazy behaviors before it adjusts back to the next trend line. So we've been trying to track the angle of this line, where we're going, and we had some pretty cool moves here. So I was looking for a consolidation breakout here, and I was thinking this was it, and we got a much cleaner, and more aggressive breakout here out of the zone than this little guy. So this is all one consolidation zone here, and I've been talking about this area as our financial crisis trend line, and I just moved that line, and I'll show you why. It's really cool. To right here. So if you'll notice here at the end of the day, all day Friday, we shot up here and we've been grinding on this angled trend line. We dropped and we came right back up and hit it again, which is really cool. And this area is very important because that angle goes, guess where? Right back to right back to our top. And that is a very similar trend line to this guy. So let me point out a couple cool things that we have here. We have our bull market line from Volmageddon, which is the 2018 crash. We have our bull market line from the financial crisis, which was the 2008 crash. And we have a new trend line down here, which is none other than the Great Depression crash. And here is what's happening. Off the top of the everything bubble, we got a pull down and a crossover here. So that's the dead cat bounce. But if you'll notice, that is really just a bull trap across this discovery line. So a bull trap and a dead cat bounce is the same thing. It just depends which line you're looking at. So if you're looking at the bigger timeline, it's a dead cat bounce under that line. If you're looking at the timeline that you're on, it's a bull trap across that line. So when we come down here, we get a run across our trend line that we're trying to establish now. But what you'll notice here is we have this crash bull run line intersecting with our higher level trend line out here, and it's like a wall, a sidewall, it's a corner where this thing reverses at the end of the bull trap. And right now, look what we just did. As we got over here, we finished our consolidation zone, and I can get in on this a little closer too and show you. There's a little consolidation zone and a breakout to the corner right here. And yeah, you can kind of see it right there, consolidation and then a breakout to the corner. So right here, we just did a consolidation and we just broke out up to the corner of a higher level trend line that we just established and our financial crisis trend line. And then you'll notice on the first one also here, we bounced off of the financial crisis trend line and our bull trap ran from the financial crisis trend line to the Volmageddon trend line. And then what we just did down here with our speed wobble is we ran from the Great Depression trend line up to our higher level outside trend line of a bigger pattern, which could potentially point down to our reversal off the end of this cycle, which is a little bit out of scope for this video. You can draw up some ideas on a longer term bear market with that line, and also this one out here, which could be the line, a potential line off the edge of, off of that top edge of the reversal. But this is what I'm looking at today. It's this edge trend line, and that will set up our zone that we're looking for, which is this type of consolidation zone that we got on the way down around our trend line. So we're looking for a middle bounce and then a consolidation area after this bull trap. And that would look something like from here, just kind of down in this general area, and then from here down into this general area. And we just try to find our consolidation zone, and then we're looking to find, like, you get like a little dead cat and then like a hop and then like a consolidation area, and we're trying to find our first guess at where this line is right here. And we could get a guess up here or down here or something. It should be somewhere in this area. We should get a bounce that gives us our next tracking estimate of that line, just like we did here. We got a bounce that was our second guess at this line, and that's what we're looking for here, is our next bounce to discover this line, and then we could get our next hop off of that guess, and then that would be bounded by our area here, and then we could come down and start trying to discover this line. And then you get the end of the cycle, speed wobble, and then off to the next market. So that is the kind of activity that we're looking for, and the speed wobble would generally cover this entire consolidation zone before switching back and forth once or twice, and that's what it did here. It covered the consolidation zone, and that's what we're doing right here, also covering the consolidation zone and bouncing off of corners. So that's pretty cool. So that's the model right now that I'm looking at, and this is predicting that we don't go definitely any higher than this edge line that we just set up. And then once we find this edge here, we're not going to go higher than that one either. And this one could be, out here. Depends on how high we bounce. We could bounce pretty high on the second hop. And I've seen second hops that bounce way up here also. So that's what we want to see, is we want to see a little V bottom and a little bounce, so we can start working on our consolidation zone for the end of this cycle. I mean, because it could be like this direction, could be this direction, and the timing is here is the end of the 3 months here. So this kind of time zone, it's a big area, and we're trying to kind of track where we're going. So I mean, it's the end of the month area, and then who knows what the height is. But we'll try to consolidate in on that and figure it out based on the next couple of moves. It could be up here and it could be really late, or it could be wider and earlier. But somewhere in here as the third target, and somewhere in here kind of as the second bounce target. And this is the same 3-month credit consolidation cycle that I always talk about, which is 3 months of negative loans available and 3 months of negative business growth. And you generally get a drawdown and a bounce type of behavior. But the angles are not quite that straightforward. So we're tracking consolidation moves and speed wobbles and looking at bull crossovers. Oh, and also this one's really cool here. If you look at even this little drop where we came to here, we got a bounce off of this line, and then we hit here. which is up in the corner off of that trend line. And then we came down and bounced and then went into a consolidation zone here. So even on the tiny timeline, it kind of did that behavior. I'll do a bigger video on the whole model that I have set up now and if it will work for a longer term projection or not, because we run out of trend lines, but this is the moves that I'm looking at based on this model right now is pretty aggressive turnover, establishing, and we'll probably kind of consolidate into this corner and set the line, and then we'll probably hit this line a couple of times. Like hit it. and then we can cross over. And then that would give us our next set of estimates from this point, which would be to our bull trap crossover. Let me get a purple. So we're looking for our next set of reversal line estimates, which would go to the crossover and then to the bounce and then to the consolidation zone before we get our next wobbly stuff and another bounce. So that's the idea. And this is not trading advice, and please hit the like button for the YouTube algorithm. Happy trading.